You're watching Capital Connection from the Illinois State Capitol.
Welcome back. Our third panel with us will explore how a graduated income tax might impact the economy, job creation, and income equality, especially during COVID-19, this pandemic, with so much uncertainty and people in unemployment in Illinois. Larry Ivory heads up the Illinois Black Chamber of Commerce, and Cherita Ellens is the president and CEO of Women Employed. She joins us from Chicago. He joins us from Peoria. Thank you both for coming on. Cherita, I want to ask you first to evaluate for us what the impact of coronavirus has been on the workforce. We've seen reporting that women and people of color have been most predominantly impacted, not only by the virus itself, but by the job losses and the economic impact. Where is that? Do you have an update on where that is today?
Yeah, well, thank you for that question, because I do think that it's very important framing. And we know that since February, that the women have experienced more than 6 million net job losses, which represents more than 50% of the net job losses since the beginning of this pandemic. And we also know that as of August, the unemployment rate for women had reached the same rates that they were since the Great Depression. And we also know that the majority of the women that are experiencing these job losses are Black and brown women, and predominantly in low-wage occupations.
So how does a graduated income tax help that?
Well, partly because it gives some immediate relief, and it relieves the burden from the income. So it directly puts money back into their households, and then over time it will allow them to begin to chip away at the income gap that we have across the country as well as in Illinois. We know that disproportionately low income and middle income families in Illinois pay a higher percentage or a higher share of their income goes to taxes than that of more wealthy families and wealthy individuals. So again, over time, that will begin to help to close the income gap.
Larry, this week, Governor Pritzker said 70% of small business owners would see a tax cut under this graduated income tax proposal. Wouldn't a little bit of that extra revenue or money in their pocket help them to grow their business?
Well, I think we have to be very careful in terms of what we say, because when you think about, this whole issue of the graduated tax, 4.95%, and then going from 4.95%, if you make over a certain amount of money, you're at above 7%. But then if you take a look at even under that, the savings that we're talking about to a business is so insignificant that it really makes no difference whatsoever. But what really does make a difference is, in my opinion, is that we're raising taxes in the middle of a pandemic. We're the only state in the United States that I'm aware of that is raising taxes in the middle of a pandemic. Now, what also happens with Economic 101, when taxes go up, businesses and $250,000 is not a lot of income in terms of business, when you talk about business. But what happens is that those who are economically mobile, and when we already have a very high tax demand on all kinds of taxes we have in the state of Illinois, then what happens, businesses decide to take their goods and services and go someplace else, or they lay off their employees, or they fundamentally just kind of quit and leave and go someplace. So those are important issues, and I think the follow to that is that we're going to have a lot of job losses going to impact minorities and women's. And it's normally going to be targeted at the restaurants, hotels, and hospitals that's going to be most adversely impacted. So for someone to make an argument that this is going to help businesses is just not true, in my honest opinion. I mean, I'm a guy who understands economics. I follow it very well. And this is not going to be much of relief at all to small businesses. In our communities, we're losing close to 40% of small businesses in the Black community will not survive. And this is not going to give them much relief. And also we're giving Springfield unyielding power to raise taxes again. There's still not going to be sufficient enough revenues. Even with the $3.4 billion tax hike, it's still not going to be enough. So what are they going to do? The solution to the problem is raise more taxes, and businesses are going to get hurt, businesses are going to leave, and are they going to pass, or businesses are going to pass the cost on to the consumers. So I just believe it's the wrong time at this time to be raising taxes in the middle of a pandemic. It just doesn't make good business sense.
Larry, what impact do you think it would have on the unemployment rate? We know it's really high right now, perhaps even inflated because of the coronavirus, but if people who make more than $250,000 a year have to pay a higher income tax, or if corporations have to pay a higher income tax, what effect would that have on employment in Illinois?
Well, it's going to have a dramatic impact. I mean, there's been a number of studies, I think, on both sides of this issue. I think we can all agree that raising taxes will not stop the exodus of businesses and people leaving the state of Illinois. So the question is, what are the numbers? Well, there's been estimates of 160,000 job loss, 180,000, and I think we can debate that, but the real reality of it is we understand this is how our economy works. That's why we live in one of the greatest systems in America, the capitalistic system, because the reality of it is when taxes go up and you have a heavy tax burden, businesses pass that cost on to its consumers, or they find someplace else to go and take their jobs and their resources with them. That's real simple.
Cherita, there was a recent study or a summary from the Civic Federation that said that they felt this rate structure, raising taxes from 4.95% up to 7.95% on the highest earners in Illinois, could entice tax avoidance behavior. Do you share that concern, and what does it say that people who make the most might be enticed to engage in tax avoidance behavior if the state implements a graduated income tax?
Okay, thank you. I also want to go back and kind of comment on some of the things that Larry said. Yes, there is a tax hike going to the wealthiest, but we are actually going to experience a tax cut for 97% of Illinoisans, period. And on those small businesses that will experience a tax hike, it is on the income that's above $250,000. So they will not be paying any more in taxes than their counterparts that also bring in income of $250,000 and higher. So it's important for people to understand that this is on income this is on their profit. This is after they pay their employees. This is after their expenses. This is considered pass-through income that then is taxed as personal income. So that's really important for people to understand that. And so when you think about offering tax cuts in a time of recession, what research and evidence have shown us is that it increases consumer spending, because lower in income families, when they have additional income, they spend that additional income. And when wealthier families are taxed at higher rates and their income may decrease a little bit, their spending does not change. So I think it's really important to offer that counterbalance. And in terms of tax avoidance, I really can't speak to that. I think people that tend to try to find loopholes and avoid paying taxes will do that in any situation. So I don't think that this would change whether or not they do it at any other time.
Cherita, I also want to ask you, we know from the data from the state and federal government that income inequality, or that gap between people who make the most and people who are at the bottom rung of the wage scale, that gap has grown wider and wider. In fact, it's exploded ever since 1970, when the state constitution locked that flat income tax in. Do you see a correlation? Do you see a direct link between a flat tax that charges everyone the same rate and that growing income inequality gap? If you do, can you explain how that would work?
Yeah, so part of that is because the percent of their income, the percent that they're paying their income to taxes is higher. So we know in Illinois, there was a study done by the Institute on Taxation and Economic Policy. And we know in Illinois, a family that's making less than $21,800 has 85% of their income remaining post-taxes, while a family that's making more than $500,000 has 92% of their income left over post taxes. So changing the tax structure is a step to fixing the inequality and inequity that's built into our structure. And will it completely solve it? No, but it is a step, and it is one of those policies that we have to consider. And quite frankly, Illinois is one of the few states left to do it. We have graduated income tax at the federal level, and over 33 other states have this graduated income tax. So it's more about us fixing a structure that was inequitable when it was created.
Mm-hmm. Many of those other 33 states, just for sake of accuracy, many of those 33 states that have a technical graduated income tax, their brackets are much different than what they would be in Illinois. And like for example, in Iowa, it might be the first $8,000 to $10,000 that you pay zero on, and then it goes up from there. So it's different in most states. But Larry, I do want to ask you about that effect as well. Never before in Illinois could you go to the voters and mount a campaign to say, you know what we should do? We should cut taxes for everyone that makes less than $1 million a year down to 3%. You just couldn't do it because the Constitution wouldn't allow it. If this graduated income tax passes, that is now an option. You could go to the public, you could build a campaign, you could pressure state lawmakers to say, let's cut taxes on everybody down to 3%, if you will, that makes less than $1 million a year. Why is that a bad option? Why wouldn't you want lawmakers to have that option at their disposal?
Well, let me just say this, is that my father-in-law has a plaque on his wall. When you go into his house, it said, you write your own history, I just keep good track of it. Let's take a look at the history of Springfield. We can go back to the lottery where this money was going to go for education. What happened for 8 years, money never got to education. We had another tax hike that we did. We've had two, but the last one, 3 years ago approximately, was a $5 billion tax hike. It was supposed to be the end all. And what happened, we got a tax hike, we paid a big bill, taxes went up, and we're right back where we started. I think we got some fundamental challenges in terms of getting this economy back on track. Illinois has a lot of great assets. We're centrally located in the United States. There's a lot that we can do. It seems like the only thing that Springfield wants to do is to raise taxes. That's the solution to the problem. We take a look at all the taxes we've been raising. Our registration for our license plates up 50%. A gas tax, one of the highest in the country. We've been taxed to death, and our only problem seems to be to raise taxes. I think it's a wrong time. It's absolutely the wrong time to raise taxes in the middle of a pandemic. If it made sense, a lot of people would be doing it. Illinois cannot afford to continue on this path that we've had where we're overspending and not being responsible. I think it's up to the taxpayers and to the constituents to vote no for this because it's absolutely the wrong thing. If it made good business sense and it made good people sense, our organization has been an advocate for people, and to talk about the wealth gap, we speak on this on a national level. This is not the solution to the wealth gap, and if people make this the argument that it's going to resolve the wealth gap in the African American community and other places, it's simply not correct. I can tell you the things that will, but simply this won't do it. So at the end of the day here, this is about giving Springfield unlimited power to come back and raise taxes on anyone it wants. And I believe that because of the $3.4 billion, they're still not going to have enough. What are they going to do? They're going to have to come back and raise taxes on someone else. And that someone else will be lower income people, and it's going to graduate. And we're going to pay more in taxes. I think it's time to stop it, and it's time to sit down with business people and community people to come up with a real solid strategy that gets Illinois back on track to where it deserves to be and how we make our economy stronger and better for everyone.
So
I want to just interject with 2 quick points there, Cherita, then we'll get to you. But Larry, you mentioned new power to raise taxes on everyone. In the interest of full disclosure and full accuracy, would also be new power to cut taxes on everyone as well. That power would also exist. It's not only to raise. And you mentioned the full and accurate history. I would just note that each of those things you mentioned, the lottery, the vehicle registration stickers, the motor fuel tax, and the flat tax increases that happened in the past, all took money out of the pockets of people in the low and middle income This one would not do that. So all those things you mentioned from history wouldn't really apply here, would they?
Well, let's say that, let's go right to the point, is that if we look at where we're at right now at this moment, you know, the rates are not baked into this whole process, and I'm not sure that we're not going to come back and raise rate. What I am certain of, though, is that this won't resolve our problem. $3.5 billion won't resolve our shortage. And it seems like the only solution that we have is to raise taxes again. And if someone has if they want to talk about a strategy that does something outside of that, that would make sense. But the reality of it is that everybody's going to get hurt by this. It's not going to strengthen our economy. And it really is just the wrong thing at the wrong time. So I guess people can make an argument either way you want, but the reality of it is that a tax hike and giving Springfield even more power to raise taxes. Yes, they can lower taxes, but what's the chance realistically? I think the taxpayers understand it's not likely in the midst of the shortage that we have that they're going to lower taxes. That's a possibility, but that's probably long sometime in the future. It's not the reality. The reality is that they're probably going to have to raise taxes again.
Cherita, I want to get your response to that, because we've had now 3 consecutive panels with people arguing against the graduated income tax who say $3.4 billion a year just isn't enough. Doesn't that admit the point that the state needs more revenue?
Absolutely. And let's talk about reality for a second. The reality is the state already has the power to raise taxes. Right now, if they raise taxes, they have to raise taxes for everyone at the same rate. What this does is allow the state to now raise taxes for those that can afford to pay it more, period. That's what this is doing. And it is also generating much needed revenue. Is it going to completely close the gap? No. But it will take us a very long way while also putting money back into the pockets of working families that are struggling to make ends meet. So I just don't understand when we talk about reality, we're leaping forward and making assumptions of what might happen down the road, as opposed to just talking clearly about what this amendment will do. This amendment will cut taxes for 97% of Illinoisans, and included in that 97% are small business owners that have pass-through entities where their income is taxed as personal income. And also, all of the worker advocate organizations, labor, AARP, the Illinois Alliance for Retired Americans, we are all backing this amendment. We are all urging for individuals and families to vote yes for the fair tax. So we all believe that this is a good deal for the working families that we represent and that we go to battle for and that we advocate for on a daily basis.
Cherita, real quickly, and then I want to come to Larry for final thoughts. We are running out of time here, but Cherita, since so many people are trying to look into the future and evaluate what this might mean down the road in Springfield, give us your take. If Springfield 1 year, 2 years, 3 years from now comes back and says, you know what, we want to raise taxes on the middle class to a higher rate than 4.95%. How would you respond, and how would women employed, the group that you're with, respond? Would you oppose that idea?
Absolutely. And it depends on, I shouldn't say absolutely, I say it depends on what the rate is going to be. Are we in a situation where we're coming out of a recession, that people are doing better, where the income gap is closing, where the joblessness has been decreased and cut, and the economy is doing well? It's too hard to look that much further in the future. And then let's look at this. How often are we going to be in a situation where legislators really want to increase taxes on middle class and lower families? That is not a popular thing to do. So I just do not believe, I don't share the same cynicism that, 2 years from now, this is a bait and switch, and now all of a sudden they're going to start increasing taxes on the middle class families. I don't see that happening. I don't believe that's happening. And one of the other things that I don't think that people talk about is that what this amendment is also doing is increasing the earned income credit. It is also increasing the amount that you can write off for your property taxes. So there's other things that's baked into this that again will help working families in real time, right now, today, and not 2-3 years from now.
Larry, I want to get your final thoughts on this before we let you go. How do you, so you mentioned earlier that you think that it's likely that Springfield could raise taxes in the future. How do you respond to that? Cherita has said, and you even said here, it doesn't go far enough. $3.4 billion doesn't go far enough. But does that mean $3.4 billion in more revenue goes in the right direction, or takes Illinois' finances, its pension systems, its education, in the right direction?
Well, if they had put into the system that the $3.4 billion was going to be used for specifically a specific area that may be of interest to the community, then we can have some conversation. But it doesn't have that. We don't know where the $3.4 billion is going to go. It could go to funding pension obligation. It could go to anywhere it wants to go, quite frankly. And the reality of it is that it's more likely they're going to raise taxes, and if you want to have a real educated guess, I think leadership is about not defining what happens now, but real leadership looks into the future. And I think as leaders in our community, we have to not only look at what's happening right now, but we got to look at the path and the course of direction we're headed, and will the things that we're doing get us to where we need to be. And the reality, the things that they're suggesting now does not get us there in the least bit. I think the challenge for us today is that we have to be able to really be honest about this tax side. And when people say this big savings, if you were to ask the constituents, how much of the big savings, if you make $100,000 and you go from 4.95 to 4.7 something, how much money did you save? A whopping, $120. So if we really want to talk about real savings, let's get real about what you really save and what benefits the average consumer. Let's not try to trick people into frosty comments that it puts the rich against the poor. I believe in America. I believe in a system that is fair, that should operate in our organization, take our time to examine the pros and cons of what we see. And when we think it doesn't make sense, we speak to it because we have a moral obligation and a fiduciary obligation to speak to what makes this economy strong and move it forward. We care about the small guy. We care about the small business. That's what we've done all our lives. So the reality of this is that I believe it's the wrong thing at the wrong time. I believe that people will continue to leave the state. I believe that's wrong. I think it's the wrong time. And quite frankly, I think take a look at all the other taxes that we have. We've been taxed to death. If you compare our state to other state real estate taxes, to second highest in the country, our solution, and quite frankly, who got us here? Springfield got us here, guys. We didn't get ourselves here. The average consumer had very little to do with how we got here and why we're in this deficit right now. And they're asking us
you might
to
argue,
trust
Larry, just devil's advocate, you might argue the flat tax got us here.
Yeah, and I also want to say that I have to jump in. Because when you say that $100 doesn't make a difference, it does make a difference for that family that is barely making it from paycheck to paycheck. There's a study done by Time's Up, and it shared that such a high percentage of women don't even have $200 in savings in their bank right now today. So $100 to you might not be a big deal. $100 to a family that's making a decision between buying groceries or paying a healthcare bill or keeping their lights on or whatever the case may be, or paying some other fee, goes a very long way. So let's not belittle what those savings are for everyday people that need that. I just think that that's irresponsible to make a statement or is out of touch with what everyday Illinoisans are faced with every day. And our job is to fight for the people, not necessarily for big businesses that can withstand this additional tax that they may have.
Well,
being a single parent myself, I understand the struggle of making it from paycheck to paycheck, and there were times where an extra $100 would have gone a very long way for me.
Well, let me just say this, since you decided to interject there, is that let's be clear, our organization has fought for the disenfranchised and fought on issues that empower people. We never belittle. We understand the struggle better than most people would ever understand the struggle in terms of the wealth gap and the challenges that we have before. We have a bad policy, and if people would like to try to fool the American public that this is going to be this great windfall, that all of a sudden it's going to put us on sound financial footing, then I don't believe it's true. We've examined it. I believe this is the wrong thing at the wrong time. And we stand, and we hope that the listening audience and the people of the state of Illinois take time to understand no on this tax hike.
Larry and Cherita, a spirited discussion. I think we're going to have to leave it there. We have much more of our discussion and our panel up online. Thank you both for joining us.
Thank you for having me.
When we come back, the policy nerds dive in to analyze the pros, the cons, what a graduated income tax would mean for the state, for education, for property taxes. That analysis is next.